Seems like every week in the show we get down into the numbers of the week and how the different commodities are doing. Kim, let's just do an overall overview of the different commodities. Let's start with wheat.
Well, you look at wheat. Wheat's in a short run downtrend. It's not moving down fast, but it just seems like every day it's just a penny or two lower, and so wheat's just wallowing around. It's in that March contract. The market's rolling over to it. It's below $5, and you know that $5 has just always been a magic mark. You look at corn. Corn prices are, if you had to put a label on it, probably moving sideways at the bottom end of the track. So it's moved from the upper end down to the bottom end. So a slight downtrend there, but mostly sideways. The soybeans price in the tank on the futures market, it's a sideways market, and it's just moved sideways. And there's really nothing out there that we can see to get excited about it, either going up or down on beans. Of course, the big bad news is on the beans, besides the futures price, is the basis is in the tank because the shortage of the demand, if you want to put it that way. Cotton, that may be the good news, is cotton prices are relatively stable. They're down around 77, and that's a good price for cotton.
Let's draw that scope out to a year. Let's go back a year. How do these prices that we have now compare to the prices a year ago? Say, 5 years too.
Well, if you look at wheat, I guess you could say there's some good news, because you go this time last year for wheat, we were looking at below $4 wheat prices, got down as we got into the January time period around $3.50, up near $5. That's just relatively good price speaking.
Right.
Of course, we need a little higher price to make some money out of wheat. You look at corn, prices are slightly lower, and of course soybeans are what, $2.50, $3 lower because of we can say because of the Chinese deal, but I think it's because we've had record soybean production the last couple of years in a row. We've taken our soybean ending stocks from right around 250 million bushels to almost 1 billion bushels now. And you increase stocks that much, you're going to have significantly lower price, and it's going to take us a while to work out of that market. Cotton's low at 77. Cotton's lower. It was up around 90. Good cotton prices, and so you look at it. Cotton's still good. Corn's in the tank. Wheat is better than it was, but still in the tank.
Now let's look at wheat right there. Overall, wheat acres could be about where they are right now, or increasing a little bit over this last year. There had to be some optimism going in that we may get a better price for wheat this year.
Well, you've got to look, when you make that production decision, it's not what the wheat price is, it's what the wheat price is relative to corn price, or what it is the sesame price, or what it is to the canola price. It's a relative. All the prices can be in the tank, but which one of those in the tank are going to help you lose the least amount of money, right, or which one's going to give you the most profit? And so I think if you look at wheat relative to corn or sorghum or other commodities whose prices have come down, wheat's looking relatively good. Also, there's some potential in wheat. If we can get a quality product, test weight, and protein, I think we can get that price up to where your producers that have your 45, 50 pound yields, they're going to be making some profit with wheat. And so the market's getting back where the upper tier can make a profit.
Okay, thank you much, Kim Anderson, grain marketing specialist here at Oklahoma State University.